Cash basis taxpayers are still accrual basis businesses. This came up in our Facebook group recently, and I'd done this video essentially years ago at a different time in a different place on another YouTube channel, so I thought it might be fun and good to kind of update it. This time we're going to use QuickBooks Online as the software. And I want to explain to you what I mean when I say that cash basis taxpayers are still accrual basis businesses. I understand, and in this video, by the way, I'm going to illustrate why there's the need for both, why we need to be able to pay our taxes on a cash basis, but at the same time, why we can't possibly run a business on that basis. And it irks me. First of all, I look into a lot of small businesses, companies, and I take them over, or they're just hiring me to do one-on-one and give them some help. And the first thing I notice is that the reporting defaults are set to cash basis. It makes me cringe when I see that, because it tells me that somebody gave them really bad guidance or was only thinking about themselves and what they need as the tax preparing professional, and wasn't thinking about the business owner at large and what their needs are. And it's a bigger problem in our industry, frankly, for us accountants and bookkeepers, that the tax preparers only think of themselves and the fact that they need to prepare the taxes, and on every possible level they seem to not all of them, of course. It's probably really a small minority in reality, but I run into this often enough to make me want to do this video, where it's clear to me that they're only thinking of themselves and the fact that they need to prepare the taxes, and they're really not thinking about the client and what the client needs. And the reason I say this affects things on several levels is the tax prep aspect is one thing. But the other thing is, the biggest complaint I get from clients about their current tax prep pros is that they're not getting any kind of guidance or advice. And the first piece of guidance that we should be giving our clients when we're looking at their books and considering whether we're doing things on a cash or accrual basis is, yes, for tax purposes, we need to do it cash, but you need to run your business on an accrual basis, which means your reporting defaults absolutely should be accrual. You're going to see later in the video how you can temporarily run the reports on a cash basis just to get the taxes filed. That's one small need on the whole year from the business owner's perspective. And we have to stop thinking of ourselves and start thinking of our business owner clients, because it's a problem, and as you can see, it irks me. It makes me crazy. Anyway, let's get to the point. I'm going to go into the sample company file. You'll notice I'm using QuickBooks Online Advanced, which has some really cool features. It is the sort of enterprise version of QuickBooks Online, similar to what QuickBooks Enterprise was for the desktop suite of QuickBooks programs. So you can see I've got a company set up. If I run this for all dates, I'm looking at the trial balance because it shows us everything. I've got a company starting it off with $1,000 in the bank. And I'm starting it off on purpose with a relatively small amount of money, because I'm going to use that fact to illustrate a really important point here, right? So let's say we've just started this business, opened up the bank account, we've got $1,000, and we're just hoping to get that first client in. And let's say now we've got that first client in, and we're going to produce an invoice. And let's say this is the kind of business, whatever the nature of the business is, where we have low volume but very big ticket items that we sell as a service. So we'll call it consulting, and let's say we're invoicing for $1 million. Okay, so we're going to create an invoice. We're going to back this up. Let's say this is January 15th of 2019. We're invoicing for $1 million. All right, we're going to save and close. And I want to start off right away by looking at some reports. I'll just uncheck the email thing so it'll let me save it. All right, now I'm going to illustrate, the first point about why it's important that we are able to pay taxes on a cash basis, because look what would happen here. Let's say it was now the end of the year and nothing else happened. If I had to pay taxes on $1 million of income, let me run the profit and loss. All right, on a proper accrual basis, I have $1 million of income. Let's do it for this year. This year, where'd you go? There you are. All right, I have $1 million of income, but I don't have nearly enough money in the bank to pay the taxes on that, right? Let's go run the balance sheet. Okay, this year, I always scroll past it. Okay, so I only have $1,000 in the bank, right? I have $1 million of net income, $1,000 in the bank. There's no way I could pay the taxes on this if I had to pay taxes on an accrual basis. So this illustrates the reason why it's important to be able to pay our taxes on a cash basis. But pretty much the rest of this video I'm going to dedicate to why you can't possibly run a business this way. Okay, first of all, let's take a look at another report. I want to illustrate something very clearly. And it's a report that even if you're a business owner and not an accountant, you really should start to get an understanding of what this report tells you, because it answers a lot of questions that you business owners ask us accountants all the time. We'll just do it for this year. And the question often is, I made all this money, but how come I don't have the money in the bank to pay the taxes, right? Well, here's a very extreme illustration of exactly, how that happens in a lot of businesses. We have all this income, but most of it's sitting in uncollected receivables. In this case, all of it is, right? So the statement of cash flows tells us, well, I have $1 million in net income, but we've increased our accounts receivable by $1 million. So you have to subtract that out to arrive at the cash that was in the bank, which was only the original $1,000 that we started off with at the beginning of the year. So again, driving the point home, hopefully driving it hard, we do have to pay taxes on a cash basis when we're a small business, but to run a business on a cash basis makes absolutely no sense, okay? So here's the next thing that happens to illustrate this. Let's say that I provided the service, and for whatever reason, I'm stupid, I didn't get a deposit, I didn't collect any money from this client. Now the client's turning around saying, you know what, we're not going to pay you, we're not happy, whatever it is. Right? So I lose $1 million. I have to get rid of it. Now, my cash basis tax-paying, tax prep professionals will tell you you can't write off bad debt on a cash basis business, which is to say that you have to ignore it. Or my friend Mike Russo says, just adjust the invoice, right? In this case, we would just void the invoice according to Mike's logic. But here's my issue with that. Again, that kind of logic is great for the tax preparer who only cares about preparing the tax return and isn't thinking about the business owner and their needs at large all year long, right? Let's just say it's 5 years from now, and I had this client who stiffed me for $1 million. As the CFO of that company, I would want to make sure that we had a really clear record of the fact that they stiffed us for that $1 million. In other words, I wouldn't want to just void an invoice. It tells the wrong story. It doesn't tell me what happened, and I have to assume 5 years from now I don't remember what happened. I need to have an audit trail that I can review to understand what happened, so that if that knucklehead of a customer comes back and says, hey, I want to do business with you again, I can go back and look at the record and say, sure, we'll do business with you, but first we need $1 million that you stiffed us on 5 years ago, and second, we're going to need another deposit, non-refundable, of $1 million. Then we can schedule a call and see what you need help with, right? That's the approach. If I don't have that audit trail, if I don't have those details represented properly in the books, I'm dead in the water, right? And to illustrate what I'm talking about, let's create another tab here, right? So we're back here. I have my balance sheet, right, which shows I have a receivable. This is accrual basis, right? I'm up here, accrual, my profit and loss up here, accrual. If I change this to cash basis, and again, this is why I'm such a, I'm so hell-bent on saying the default should always be accrual, because that's how we need to run a business. Notice cash basis to profit and loss. There's no income. Doesn't recognize it because it hasn't been paid yet. I changed the balance sheet to cash, and the accounts receivable is gone. There's no receivable. Nobody owes us any money. In theory, and being a little extreme and silly about it, if I were running my business truly cash basis, there would be no one to call to say, hey, you haven't paid me my $1 million yet. I wouldn't see it. I wouldn't have the reminder that it's there because I'm running my balance sheet on a cash basis, which, as you just saw, eliminates the accounts receivable. Okay? Now, I want to do something else. Let's go back to accrual here. And back to accrual here. And let's go into the invoice. And I want to backdate this invoice to sometime in the previous year. Okay, so instead of January 15th, 19, let's say 12/15/18. It just needs to be sitting in the prior year, and you'll see why. Okay, so sitting in the prior year, back to my report summary. This year now I have no income, right? Because the income was in the previous year. If I go last year, accrual basis, the income was last year. That's when I earned the $1 million, right? Looking at the balance sheet, nothing's changed there. I still have the receivable of $1 million. The customer still owes it to me. They never paid it to me from 2018. And then, like I said, let's say that the client, that we're not going to get paid. And sure, we'll go to court and all that, but accounting-wise, in the meantime, we got to write it off, right? I don't care what the cash basis tax prep professionals say. I have to write it off. I have to know what happened. I can't ignore it. I can't let it sit in accounts receivable forever, right? So we're gonna post an invoice. I'm just gonna go to another screen here, and we're gonna say new, and we're gonna say journal entry, and I'm gonna say it's now the end of the year. I'm not getting my money There's my $1 million. Okay, and we'll write this off to bad debt expense. Okay, and I have to create it. All right, save and close. And over here, we're crediting accounts receivable for the $1 million. And we need the customer's name there. Okay, and this journal entry is going to be today, 12/9/19, the day I'm recording this video. All right, we'll hit save and new. Actually, I could have just done save and close. And now look what happens. So now, what are we looking at? Statement of cash flows. Let's go back to the balance sheet. Okay, my accounts receivable zeroes out because I took that $1 million and I wrote it off. It's no longer owed to me. I'm writing it off as an expense. Let's go back to the profit and loss for this year. Profit and loss for last year, accrual basis, still shows the income of $1 million, right? Then when I go to this year, what happens is I now have the expense for the bad debt that I wrote off of $1 million. Over the long haul accrual basis, it's a wash. I had the income last year, I had the expense this year when we wrote it off, and it ends up being a wash. Now watch what happens on a cash basis. Of course, if I run this, okay, I have the bad debt expense in the current year of $1 million, right? And then if I go back to last year, I got nothing, right? Cash basis, I got nothing. So we have to write it off, and then we have to apply the write-off. Because if I go now to, let's use this tab now. Yeah, there's my statement of cash flows. If I go here to an open invoices report, you have to understand what happens here. I wrote it off, so it nets out to zero, but QuickBooks doesn't yet know that this $1 million was effectively paid off by this journal entry. So we have to kind of marry the two, right? So one way to do that, if we go into the invoice, I don't think it's going to do it. Depending on which side you approach it from, QuickBooks Online will sometimes give you a pop-out on the right where you can apply a credit like this. But in this case, we're just going to pretend for a minute like we're receiving a payment, okay, from some customer. And we're going to do the invoice. And over here, we're going to check off the credit. So there's no actual payment, right? We have the credit from the journal entry of $1 million. We have the invoice of $1 million. There's no actual amount received, right? So let's save that. Okay, the payment date is, it doesn't matter. It's really, and it's all going to be driven by the journal entry, the date of the journal entry when we wrote it off once this gets applied. And I'll show you what I mean. So now what happens, if I go back here, last year on a cash basis, nothing happens, right? But this year on a cash basis, once I've written it off and applied the credit, watch what happens. So cash basis, the income now shows up because the invoice got paid in the current year effectively by writing off that bad debt and applying the credit. So the date that the credit was created that got applied was this year, right? So now cash basis, the income shows up, but the bad debt also shows up. So the bottom line is it's a wash. You're not going to pay any taxes on this. Now, there are some cases, some states that charge you gross receipts taxes. So the way to fix that, instead of having bad debt expense show up as an expense, let's go over to our chart of accounts. And all we're going to do is going to change that account classification. Let's edit the account. Okay, and what we're going to do is we're going to make this what's called a contra income account. All right, so let's call it cash basis bad debt write-offs or something like that. Okay, and we can just call it, you know, well, service or fee income, whatever. The truth is it's almost like a discount or a refund given. But again, that even kind of tells the wrong story. I don't like calling it that because I give a discount or a refund as a good faith thing. Here we're not talking about any kind of good faith. Didn't like my title, it's too long. So let's just call it bad debt write-offs. Actually, I think it did have the whole thing, but either way, that's better. Save and close, yes. Okay, now let's go back to our profit and loss and rerun it. And that way we can, when we're going to the state that's charging us gross receipts taxes, we can show them, you know, this is a bad debt write-off. It's cash basis, so, you know, it's showing up in the current period. So this way we can properly offset that against the sales, so we're not effectively paying any gross receipts taxes on that. It's just a reporting mechanism so that we're reminded that this should not, in other words, we shouldn't pay any taxes, even a gross receipts tax on these sales, because these sales never in fact were received. Again, an argument for why we pay taxes on a cash basis, but never run a business on a cash basis, right? So the bottom line is, I can't run my business on a cash basis because I can't ignore the receivables. I need to be able to run my company. I need to be able to look at the history and see what happened. I need to know that somebody stiffed me for $1 million and that I had to write it off because I wouldn't want to do business with them, or like I said before, not without a substantial deposit, right? Not to mention getting paid what they owed me from the last time around. So the bottom line is, we have to remember, and when I say we, I'm talking to my fellow accounting and bookkeeping professionals out there, we have to remember that cash basis taxpayers are still accrual basis businesses. In order to run a business properly, a business owner needs to see the whole picture, and cash basis cuts out the receivables and the payables. We didn't talk about payables here, but it also cuts out the payables part of the picture, and you can't run a business that way. I have to know who owes me money. I have to know whom I need to call. I have to know whom I owe money to, which again, the payables side gets cut out of the picture on a cash basis as well. So bottom line, cash basis taxpayers, great. Accrual basis businesses need to run things that way. No exceptions, no ifs, ands, or buts. Post your comments and questions. I know some people are going to get angry at me when they hear me, talking about all this stuff, because I'm going to say, no, cash basis has got to do it. Write your comments. I will look forward to the discussion, as spirited as it might be, or maybe you agree with me, and if you do, post your comments to that effect as well. Don't forget to subscribe right here on YouTube. And don't forget that over on my website at new.nerdenterprises.com, we have Nerd Buzz, where there's lots of great additional information beyond what you see here on YouTube, detailed write-ups, screenshots, downloads of templates, and all kinds of exciting things. It's all free. You just need to create an account, which means I need your name and email, and then you're off and running. That, my friends, is my story, and I'm sticking to it. As always, I hope you had some fun here, learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.